It's Louise Bedford here, your host of the Talking Trading Show. Every week, I help you decide what, when, and where to trade, and I give you specific techniques to lead you towards incredible trading success. I'm so glad to be here with you today. In just a moment, I'll be introducing Kate Hill. But just before that, I wanted to have a chat with you about something I think a lot of us are experiencing at the moment. It's called the Kafka effect. Now, I know all of you have had a big goal, something in your heart that you're looking to achieve, something that is very, very special to you. But then as you get closer to that goal, sometimes it's like you want to quit. It's like this fog sets in and it clouds your mind and you can't think of what to do next. And you're thinking it's all too hard. Now, I'm seeing that in my traders right now. They want to trade effectively. They want to even be a full-time trader for many of them. But sometimes those creeping doubts just creep up and they say, you can't do this. Now, this is what this episode is all about. I'm here to help you overcome that Kafka effect, and you are going to get to eavesdrop on a conversation that I'm going to have with Kate Hill. Now, Kate Hill is a wonderful, wonderful presenter. I have just clicked with this lady. She is the author of The Female Investor, and she's a property investment advisor and a mentor. Sounds similar, doesn't it? I know I do the shares and she does the property. The lovely thing is that she has helped thousands of investors fulfill their financial potential and create wealth, security, and freedom. She's also the host of the Female Investor podcast, which is why we bonded so easily as well. We share the same editor. My books are produced by Wiley. Kate's books are produced by Wiley, which is the second largest publishing firm in the world. So you know that they have complete rigor with who they take on board. Now, just before all the guys turn off, just know that this episode is not just for women. We're going to talk about kicking your investment goals, but we're also going to talk about why some people stall right before they get to that impressive goal. That is so important. And self-sabotage is another area because so many of us just shoot ourselves in the foot. We're also going to discuss the warning signs that you have to look for in your investing and trading journey, including aspects of life stages. These are areas that are based on brand new research that I'll present to you. And to kick off, I'm going to hand over to Kate.
Hello, everyone. Now, as I very proudly declare in my podcast, The Female Investor, it is your chance to get support, information on all things property, finance, and investment strategy. And today we are equally, really getting into it. And as most of you know, I founded and run the buyer's agency Adviseable. I am a property investment advisor, a qualified property investment advisor, a mentor, and a buyer's agent. I buy property for my clients every day. And I'm very, very excited to have on the show today a very special guest and female investor extraordinaire, Louise Bedford from thetradinggame.com.au. And today, Louise and I are going to be talking about I guess mainly women, but again, fellas, don't turn off. It's very applicable to everyone, but women in trading and in property and some of the similarities between the two. Louise is bringing her fabulous expert knowledge and experience from many years of trading to talk to us today. So Louise, also welcome to the podcast. It is wonderful to see you and have you here.
Oh, thank you so much, Kate. I'm so looking forward to this. We've got so many areas that are commonalities between the two of us.
We do. I'm very, very excited to, I guess, follow and hear how our conversation is going to pan out because of those similarities. I think about mindset, and you've said it before, positivity. and which can very much be translated across the investment classes, I think. So if you don't mind, before we really get into it, just tell us a little bit about yourself and what you do.
Sure. Well, I'm a best-selling author of 5 books on the share market. I know that you and I share that same publisher, Kate, so you know how important Wiley is to both of us. They are the second largest publishing firm in the world. So for us to be able to get to this stage with the two of us, to be able to collaborate is fantastic. I run a mentor program that helps traders trade every instrument over every time frame, but where it's their own trading plan. And this is my 23rd year that I'll be running the mentor program with the co-founder of tradinggame.com.au, my business partner, Christopher Tate. Now, I am also a podcast host. We've got so many things in common.
I know.
So my podcast is talkingtrading.com.au.
Wonderful. So I say, we have a lot to talk about. Let's not keep the lovely people waiting any longer. And as you were talking, I'm just thinking, yep, me too. Tick, tick. Yep, it's all very, very similar. So look, it's often been said that women, and I hear this a lot too, women make better investors than men. I've heard that women in trading often make more money than the fellas do. Tell us a little bit about that. And again, I do want to highlight, I don't want to alienate all the lovely fellas out there, right? But it's just, I do hear that a lot. So tell us about your experiences, and I think maybe we can get into a little bit why that might be.
Yes. Well, look, that is the case. I ran a very large survey in 2018 to look at this particular subject, and my results did replicate an earlier study in the 1990s by Brad Barber and Terence O'Dean. So it is fascinating to me, though, that there is a lot of research now, especially about how women have got some things that they're up against as well, and that we can learn from the guys with that testosterone-induced confidence. So we will talk about that in just a moment, but let's have a look at the facts first, because I want to take you through some of the research here. So this year, there has been a lot of study about the impact of the financial crisis that we're potentially going through and will continue to go through, depending on whether you believe we're in a recession or not. I think we can all say the market has turned down. So here's a headline for you. In times of stress, female fund managers take less risk than their male counterparts for the same performance. Now, that is fascinating. In general terms, female fund managers are risk averse compared to their male counterparts, and their position sizes are often lower, which means they can spread themselves further, and of course, that assists with diversification. Now, I do think that is an interesting aspect. It's from the institutionalinvestor.com, very well respected. I'll just give you a couple of other pieces of current research. 2021, Fidelity is a brilliant company for doing these studies. They found that women outperformed men by 0.4% on average. Doesn't sound like much until we start compounding. The Brad Barber and Terence O'Dean found 2%. I personally found 1.8% with my survey. Now, the interesting unfortunate aspect to this is only 33% feel confident in their ability to make investment decisions, Kate.
And do you mean specifically women?
Women, yeah.
Yeah.
So on average, the men are more confident than we are.
Yes. And I think in my very specifically property world, that would be echoed in very similar ways, that women tend to take less risk in their investment choices that I obviously help them make. But when I'm having those early strategy conversations with the ladies, or let's even say where there is a couple, but the lady is the driving force behind it, or the lead, which is often the case, there tends to be a much more modest and considered approach than, not always, of course, than with the male counterpart.
Yeah.
And I guess in a preference to spend less money on a property, not, and which does not, because one of the myths in the property world is the more you spend, the better the investment. Absolutely false myth. Blow that apart right immediately. That doesn't mean there is a certain minimum you would want to spend to be properly invested, but I very much echo that's the results of that in what I find in my day-to-day property
And
life.
there is a lasting impact with this sort of information because it shows up in so many places. One of the aspects that I think is just so unfortunate is that on average, and this is from, it's actually the cnbc.com site, which is a very extensive site, as you could imagine. On average, men are saving more for retirement than their female counterparts. And the cost of living for women has skyrocketed. All through the pandemic, we have taken on roles that are paying less, that gender pay gap is expanding, and we are also working in less glamour roles. Now, I'll just describe what I mean by that. We're not putting our hand up for those big assignments that can make a big difference to our life. We are keeping a cap on our potential by not putting our hand up. And that lack of confidence is something we need to overcome as female investors. It is something that I believe we need to look at the data to say that we can do this as well as the men, and that this is not a gender issue. The ability to create money out of thin air is for both males and females.
Wow. Yeah, absolutely. I mean, I think you and I could probably talk about that for an hour and a half. Just that one, just that one statement, right? I have so much to say for myself on that issue. I can't even begin to tell you. So I think we'll come back to that. I think it will be a thread throughout this conversation.
Absolutely.
I think there is very much a fine line to be trodden between, I guess, a path to forge between moving ahead confidently, not too confidently. You don't want to start, and this kind of brings us up to my next sort of little point that I wanted to talk to you about. But you do need to do something. You need to have the confidence to actually do something, but also to then make a genuine difference in your life, to do enough, like you say, don't cap. And again, I think we should come back to that a little bit later. I echo all of that in property world. And we talk about it in our book, The Female Investor. And I blog about it. I post about it a lot in terms of the gender pay gap and how women do suffer long term because of lack of super, lack of, that compounding as well. So,
and some of it I think might even be stereotype threat here, Kate. One of the studies that I think was fascinating was they got high school kids to do a maths test where they got them to mark down their gender prior to doing the test, and then they had a control group where they didn't do that. So the only thing different between the two maths results was the fact that one group had to mark down their gender, and it was a statistically significant lower number that those girls scored when they were reminded of their gender. So we do need to make this public. I love what you're doing. You are giving this data-oriented approach a voice to say that women are just as good as men in the fields of maths, investing, and processes, which is terrific. So I do feel that that is one of the things that we really bond with, Kate.
Yes, absolutely. And I think, look, even not to go off topic really, but just as it occurs to me, I think in my we could spend another 2 hours talking about childhood and upbringing and nature and nurture, couldn't we? But it's it's very much, I think, in my daily, the way I conduct myself in life, I perhaps am slightly unusual, I don't know, in that I don't think of myself first as a woman. Honestly, I'm a human being along with billions of others. It's not in the forefront of my mind. I kind of just forge ahead. I was raised by a very strong woman. I don't think Kate equals woman equals, but I think Kate, human being, go forge ahead,
I think there's a lot in that. I think that is a real key. And if we can take that from that math study,
that's right.
that is a really significant aspect.
Yes. So let's, and something you said a couple of minutes ago, I think, if you don't mind, if we can come back to that in terms of, and we both did really, that risk management is very important. Obviously, I think it's underrated, I think, but I do think women are good at it. I think everyone should be good at it whilst forging ahead. I think it yields better results. It gives you more confidence. Louise, what for you are, I guess, in the trading world, what are some of those key aspects of risk management, and how can they be applied to property? And maybe I can chip in where
you can help. Yes, help out.
Yes.
Look, I do think there are some things here when we're dealing with money that are widely applicable. So one of the things that I know that property investors don't talk about too much is portfolio heat. Let me describe what that is. It's so that when the market starts to really push ahead, you don't go all in. It's to save you from yourself. That's what it is. So what we do as traders is we look at risk per trade, and then we look at overall risk. So at any one stage, we don't want more than 5% of our available equity exposed in terms of risk to the markets. So I'll give you perhaps as a trader an exact example. Let's say that you're making a risk factor of 1% per trade. So you're prepared to lose 1% of your equity on a particular share position, and what you do is you'd never go over 5% portfolio heat. So you wouldn't open more than 5 trades to begin with until those trades had trended up and they'd gone past that break-even point. At any one stage, you shouldn't be able to lose more than 5% of your money, Kate. It's a really significant principle.
Yeah. Yes, no, I think you're right. Absolutely. It's in terms of, just to come back to what you started with, that property investors don't talk to too much. Generally, no. You'll be pleased to know that I do. every single client. We put together a client brief. We look at their existing portfolio, if there is one. Sometimes there isn't, right? They're starting fresh. But with clients that we work with on multiple purchases, which is one of my favorite things to do, because then I am part of building that portfolio from start to finish, right? We absolutely diversify. We're not putting all our property buying eggs in one city or location basket. We are moving it around. It's not just about city. It's also about demographic. It's about, what the industries in that city are. You don't want to be beholden ever to something like the mining industry or the agricultural industry or the tourism industry, all these volatile things. You need to be very aware of your risk exposure from that perspective, right? So
and something related to that as well is the Kelly principle. So the Kelly principle is where you don't ever put more than 25% of your money into one position. So that is really critical, because I just had this little share called Futurist. I loved it. Okay. This is how I learned it all these years ago. You're about to hear a disaster story. So I did have a fair chunk of my money in Futurist because it kept on going up and I kept on adding money, but I forgot about that whole idea, what happens if it dumps. So this thing gapped down, and it was such a gap, you can't get out in that gap. It just went down and down, and it went right past my stop loss. And stop losses are great, but these days, luckily, we've got CFDs, so we've got a guaranteed stop loss order. They will fix that stop for you and you'll get out at that price. But unfortunately, if it gaps past your price with a non-DSLO trade, then you can be in trouble, which is why we need the Kelly principle to protect us. We don't put too much of our money into one particular asset.
Absolutely. And with property, of course, you can't trade in and out that quickly. You can't just click your fingers. You need to marketing campaign and find a buyer and blah blah blah. So it's and sometimes I would guess that there is a higher volume or higher amount of money involved that you're spending,
Oh,
maybe.
I agree. I agree. So I do think some of these principles can be
Absolutely.
directly transported
Yeah.
into your field. And probably the
Yeah.
third final one that I'd like to mention on risk management is maintenance. So having a look, once you've become fully invested, you've got all of your trades nicely lined up, you've got the data, which ones are underperforming? Are you underperforming in a particular time frame? Like if you can't trade for hourly charts, what the hell? Get rid of them. You don't need them. Maybe your forte is a weekly chart. Who knows? Until you've got that data, you can't make that decision. So looking through the data, finding the duds, whether it be a system, whether it be a type of trade that you're constantly doing, maybe it's a time frame, find the dud and weed it out. Have you got something that's similar to that in property, Kate?
Oh, very much so. But again, it's not that quick and easy to get out. And it might take you several years to figure out you've got a dud. Right. And it will also depend, again, it's very localized, of course. It's like with with depending on if you're buying shares in one company versus another, they don't all perform the same way. It's the same with property areas. I'm forever saying, different areas perform for different reasons at different times. They're all doing different things at the same time, doing different things for different reasons. So and that's part of my job, to work out certainly for clients, where are we buying for these clients? What's their situation? How much have they got to spend? What's their time frame? So there are certain areas that I wouldn't buy for a client who's maybe only starting. When I say only starting, it's never too late to start, but who might not be starting until they're in their late 50s. There's certain areas I would never, I'd never do that. So, but it might take you a long time to find out, actually, this asset isn't performing the way I had hoped it would. And sometimes while you're holding the asset over 10 to 15 years, circumstances in that locality might change that you weren't able to predict.
So true. It is so true. And also in trading, I think that what our conversation really reinforces to me, the reason why successful property investors do so well with the share market is because it's a similar mindset.
Yeah. Yes, absolutely. So, and that initial due diligence that you're doing it's critical, but so is maintenance. Absolutely. To keep checking in. How is it performing? Are you getting a high turnover of tenants? And actually also maintain the asset itself. So many investors let their properties go to rack and ruin. They don't spend basic money, or they don't allocate money to just maintaining the asset well. So you're going to attract a quality tenant and get a better return on your investment. Again, my gosh, it's a whole other podcast. So I'd love to come back to some of that stuff we talked about earlier, if you don't mind, in terms of mindset, because a lot of this is, to me, it's all related to the psychology of it all, and having confidence and not stalling, and I guess not shooting yourself in the foot. So what would you say are the main ways that people do shoot themselves in the foot when it comes to the stock market? And then I can chip in again and go, hey, yes, I'm doing that too.
I do see people spreading themselves too thin. They think they have this image of the share trader that has to be on all the time, always in front of the computer, always trading around the clock. Now, any of that is going to lead into a definite situation of decision fatigue. If you have multiple decisions to make, you don't have time to breathe, your decisions will be of a lower quality per decision. So if you're trading a 4-minute chart compared to a 4-weekly chart, the speed of decision making can really run people over. And I think that is one of the key ways people self-sabotage. They think they can do too much with too few resources, without the support either at home or of a mentor to show them the way to go.
And that's what you do, right?
Yeah, that's it. And I do it because I spent so long trying to work this out myself, Kate. I just want to stop people from having to tread in every aching step that I had to tread in when I was getting going all those years ago, 30 plus years ago.
And Talk to me about the importance of, you're going to love, everyone's going to love this, the planning, having a plan. Like for us, it's a property investment plan. For you,
It's a trading
trading
plan.
plan.
Yes, it's
Mm.
such a key. And I don't think you can just take somebody else's trading plan and
No,
instantly make it
oh,
your
no, no,
own.
no, no,
I
no.
think it's an error that people make. They think that they can automatically transport Warren Buffett's plan into their own head and get the same result. It doesn't work that way. So, a trading plan has to look at your trading system, which is very trading specific. So, it's your entry, your exit, and your position sizing.
Mm,
So it's
mm,
all the things that we think of as the specific decisions around which trade to take, when
mm,
to take it, how much money to place in that trade. But wrapped around that is similar to a business plan. So,
mm,
what are you going to do when you go on holidays? If you are sick, who is going to close out your trades for you? What markets are you going to trade? What universes are you going to focus on? And
mm,
that's where you can follow a trading plan template. So, a template is a wonderful way to do it where it's asking you questions, you can fill in answers, and
mm,
before you know it, you've created your own trading plan, which
mm.
is, of course, the one that I've got on my website, the trading
Yes,
plan template that you can download for
yes.
free. I do suggest even property investors download that because there are aspects there that are
Mm.
commonalities between the two areas.
Yes, absolutely. And I think, yes, everyone. So I'll put that in the description below as well. Obviously, love, I'll link to all of that.
Yeah, great. And I'll do the same for all of your resources too, Kate, because they're just too valuable for
It
people not to research
absolutely.
them and find
Yeah,
them.
yeah. And look,
Yeah.
the similarities I'm picking out there are very much the in property world. Somebody will buy the latest property investor magazine, which is often very useful, or they talk to someone at a barbecue who's just bought an apartment in X location, and they think, oh, I will do exactly the same thing, or that's the hottest thing, that's where everyone's buying, I will do the same thing. To me, that's the biggest risk you can take,
Yeah.
right?
It's
That's
surprising, isn't it? And that's not what we
absolutely.
mean by
Mm,
following in somebody's footsteps.
no.
That is just not. This is
No.
a considered choice here.
Mm.
It is a high performance endeavor, and you do have to commit some thought to it and to find the right people to guide you.
Absolutely. I think that's that quality advice, and I'm just going to be honest and put that out there. This isn't just self-serving. I sought advice, and obviously I provide that kind of advice. But even if people don't talk to me, it's fine. But talk to a qualified, experienced, and ethical, especially in property, an ethical advisor who is going to look after your interests and not their own, but who will, provide quality information and customized information, because certainly in property, it is not a one size fits all approach, right?
And you do bring up a point there, Kate, that we also have our own mentors. It's not that,
Yeah,
you get to the
yes,
top of the mountain.
yeah,
Like in my trading plan, one of the things
mhm,
that I have that I think everybody does need this in their trading plan.
yeah,
If you lose a certain amount of money, all right, and
mm,
I'll give you a percentage, it's
mm,
25%. If I draw down 25% or more, then I will stop entering new positions
mm,
and I will consult what I've got in my trading plan as a higher authority to talk me
mm,
through. Maybe
mm,
I'm out of sync with the market. Maybe the timing's not right. Maybe there's other
mm,
things going on
mm,
in my life. But to have that person listed down, or people or team that
mm,
you can draw on when the going gets tough. And I'm so proud when people list me in their trading plan
mm,
to be that
yeah,
consultant, that
yes,
higher authority, to be able to
yes,
help them through the sticky times. I mean, it's
yes.
just such an honor.
It is, and and the reward and the joy I think both of us get from helping people succeed and get to reach their financial goals, get to where they want to be in however many years. That it makes my world go round. I
Yeah, mine
mean it
too.
really, like genuinely.
Yeah.
Yeah,
And when you
yeah,
look at women in particular, there are certain
yeah.
ages where I would consider them to be danger zones,
Mm.
and it's during times of transition. So I'm not sure whether you're familiar with some of the one trial learning studies, Kate, which are fascinating. Basically, it's doing that thing that has created such a devastating effect that you will never ever do it again.
Yeah. Yeah. Yeah.
So some people call marriage that too. They get divorced and they're never going to marry again. If
Yes.
that is reinforced as your one trial learning, then let's have a look at that and see how that can impact. If you have had that experience, you're in a situation where you were a very vulnerable person,
Yeah.
and that is more likely during times of neural stress.
Mm.
So when you've had a baby, when you first get married, maybe if your spouse dies, I mean, heaven forbid, maybe if you're embarking on a new relationship, all of those times leave us vulnerable, but also open to consequences. So one of the areas that I've been looking at recently, Kate, now some studies have called it the financially uninvolved woman. I don't know whether you'd like to discuss that.
Just
Yeah.
love that expression. It's like I
Yeah.
do and I don't, right? I mean, I don't.
I'm hearing you. I'm hearing you. I've
But
actually
what? Oh,
tried to soften it a little bit. I'm calling her the changing circumstance woman.
woman.
Okay.
Yes,
I think
absolutely.
that that's
Yeah.
a kinder
Yes.
way to go. Now, this is also based on the studies that I've done with my own traders. So the rough age is 35 to 50. Often these people who are changing circumstance are going through a divorce,
Mm.
becoming a mother, experiencing a spouse changeover, shall we call it, or a
Mhm.
health scare, and it has led to a definite desire for control. Now, that desire for control is particularly prevalent 4 months after the property settlement is maintained in a divorce. So
Mm.
think of that 4 month mark. That is when plastic surgery peaks for women. 4 months after the settlement with
Right.
their divorce. So
Yeah.
they've got money, they want to make some changes, they want to improve. Where shall I do it? I'll start with, here or here, as I'm
Mm.
pointing on the video. So
Yes,
for
that's
everybody watching in an audio, you can imagine those two spots that I just pointed to.
yes.
So I do think that is a particular danger zone for people in transition. If you do want to trade to be independent, be careful about those snap decisions you're going to make at
Mm.
that stage. Don't make a major decision without consulting somebody who has your best interests at heart, and certainly write down a pros and a cons list, because sometimes we can be so myopic, we think that all there is roses and an upside, and why
Mm.
not get involved with that guy that might be a complete narcissist and take the rest of our money? Why not?
Mm.
We need to sit, stop, think, add in a pause to our decision making, and realize that unfortunately, nearly 1 million Australians are living in severe poverty, and women are most affected. So this is from a March 2022 study. Women are more likely to live in households below the poverty line than men. And from another study, that's more likely to happen after a divorce.
Mm.
So that is a really significant time frame and area for women to be aware of, Kate.
Mm. And I come across that. I was going to say I agree with all of that. I mean, it's a study. It's not for me to agree or disagree, but I guess I see the effects of it, on a daily basis with clients, ladies whose partner has died. Sometimes they start off as a client couple, and then unfortunately one passes away, and then the other one, they obviously take time to grieve. There's a client case study in my book about this, a very lady like this who is hopefully going to be on the podcast soon. She's an inspiration to all. Takes their time, things, awful administration process, but then comes back and is now buying her second property, right? But I do see ladies in that situation a lot that have taken that time, 4 months, or however long it takes, and will then come and improve their situation, and as you were talking, one thing occurs to me. It was that, when you said there's that stop and that pause that I think women, maybe that's what makes women the better investor.
I do think there's a lot to be said with that. I
Yeah.
also think it's like
Mm,
if you think that you're starting behind the eight ball because we think of
mm,
it as being a male domain, that sometimes you'll try just that little bit harder.
mm.
You'll get all of your ducks in a row. You'll make sure that you've got a conservative view so you don't blow up with the first sign of
Yeah.
weakness. I
Yeah.
don't mind that extra level of diligence. And that's something that
Mm,
every guy listening needs to also take into account. So
yes.
some of the difficulties that men face over trading and overconfidence.
Yes.
Now, women generally, and I'm basing it on a few different studies here, take fewer trades and they also feel worse about their results, thinking that everybody else is outperforming them. So
Yeah.
I
Yeah.
think the thing that I'm loving about this conversation is, ladies, you can do this. There is every reason why
Mm,
you can totally dominate in this area by getting the education you need and taking the action. And also know that this is within your control and
mm.
within your skill set.
Absolutely. Ditto to all of that. And backing yourself, and having confidence and resilience. I think that, again, that's what women are very good at. The resilience,
Absolutely. I
right?
think that's why, as well,
Good.
podcasts like yours and
Mm.
frankly mine,
And
this
yours.
is getting the word out there. It's
Yeah.
something that we need continual
Mm,
reinforcement. It's
mm,
not something that you can say, I've reached the end of my educational journey. I'm
mm.
here. I have
Yeah.
arrived. It doesn't work that way. We need
Yeah.
that continual input to make sure that we stay inspired, on
Yeah.
top of the latest techniques, and that
Mm.
we're looking after ourselves. This is a form
Yeah.
of self-care.
Totally. And I think, again, without being derogatory to all our lovely male listeners, but I think there is less, and I hate to call it ego, but the word is out there now, that is slightly less of an issue again for ladies. I don't think we're afraid to learn more and put our hand up and go, hey, I didn't understand a word of what you just said. Can you explain it to me in words of less than one syllable? Absolutely. There's less fear of that. There's more fear of unknown, but then there isn't that fear to go, hey, I need to learn this.
So we
And
can all
yeah,
learn from the other side
absolutely.
of the fence here. And I think
Absolutely.
there is probably some happy medium
Mm,
where you've got the person with just the right amount of
mm,
confidence and willing to take on
yeah,
suggestions from
absolutely.
educators. There's
Mm.
probably that utopian person. So let's all try to strive to be that person.
Wow. Didn't we cover off a lot?
I loved it,
I think
Kate.
it needs to be a whole new series of podcasts,
You
Louise.
are a wealth of
God.
knowledge. I'm so glad that this is going on to my show,
Mm,
talkingtrading.com.au, as well as your show. Now, for the people who are listening who are my traders, Kate, could you give us some guidance about how
mm.
people can find you?
Absolutely. So through the podcast is obviously The Female Investor. There is the book out there, The Female Investor. It's out in all good bookshops and online. You can contact us at info@thefemaleinvestor.com.au. You can also go to my business website, which is Adviseable, which has an E in the middle, awkwardly. Don't get me started on that. Adviseable.com.au. And I am Kate at adviseable.com.au. And Louise, do the same for us. How can all my lovely listeners get in touch with you?
Come and visit me at tradinggame.com.au and download my free trading plan template. And I'll also give you as a bonus my 5-part e-course called Trading Made Simple. And even if you're an experienced investor, that will really assist getting your head around the markets, understanding how you can use some of the trading principles to excel in the property market as well. Because if you do well in one area, you're more likely to do well in another. Kate, it's been magic having you on our shows.
Me too. Me too.
I love
Thank
the
you so much.
co-producing
I
idea.
love it. Me too.
And check out the show notes, everybody, because we'll contain links. Until next time, enjoy your self-trading, whether it's property or shares. And Kate and I will say goodbye.
See you all soon. Bye, everyone.